you recently noted that ultra-wealthy circles in Asia are bypassing intermediaries and entering the gold market directly. What's driving that shift, and what implications does it have for liquidity, pricing dynamics in the Asian physical markets? All right, welcome everyone. It is a Friday in August, and I'm with Eric Young. Well known on X, he has done interviews with Mario Manico64 and a few others, and I've been following him for some time, and I wanted to bring him on for many reasons, but primarily since he lives in Hong Kong, and he's very savvy in the markets. And I have a few questions that I think are really, really important from a silver gold perspective, and also, of course, the macro picture. So, Eric, why don't you go ahead and introduce yourself for people that don't know you, which most of my followers would, and then I'm going to get into the first set of questions.
Okay, well, thanks, David, for having me on your show. First of all, thank you. And just want your audience to know that I am situated in Hong Kong, and I've been buying physical gold and silver, since before Trump came into office, like around probably like the first serious purchase for me of physical gold, if I can call it that, is around post GFC. So right after the Great Financial Crisis, I bought a bunch of physical gold bars, and and then when Trump came to office, and he told Powell to cut rates, for the first time when he was in office. I thought to myself, hey, these guys are really going to crank up the printers, and this I don't see how this is going to turn around. So I really backed up the truck at that point, and I loaded up with a lot of physical gold and silver. Okay, so I think like gold was around $1,200 at that point, 2018-19, and silver was around $14 per troy ounce.
So you've almost got a triple on both of those. That's excellent, and not having to wait that long, at least from my perspective.
Yeah, I agree with you, David. I mean, like 5 years to me, I think in the big scheme of things, it's not that long. I mean, I talked to a lot of the older fellows like yourself, and some of them have been buying silver since 1980, or even before that, and they are saying, sad for the people who bought in 1980 if they bought like near the top 40. I don't know, like 35, $40. They waited for almost 50 years, right? Like, not 50, 45, right? But it's a long time. So 5 years compared to 45 years is nothing. It's a blink of an eye. Yeah.
Okay, so I've kind of divided into three themes here, and the first theme that I'm going to focus on with three questions are shifts in Asians' precious metals demand. And if I, quote you or whatever, and it's a misquote or a misunderstanding, just shoot it right back at me. I can take it. So, shifts in the Asian precious metals demand, ultra-wealthy participation. Eric, you recently noted that ultra-wealthy circles in Asia are bypassing intermediaries and entering the gold market directly. What's driving that shift, and what implications does it have for liquidity, pricing dynamics in the Asian physical markets?
So I can only speak for Hong Kong and China, because that's the market that I'm in, right? But I can tell you this, David. As you know, with the gold and silver markets, there are many choke points. What I mean by that is, there are a lot of people out there, experts with quotation marks, say that if you have a will, if you really want it, you can buy any sort of gold and silver anywhere, right? It's true.
Right.
That's a true statement in itself, right? But the fact is, when you are buying millions of dollars, okay, or even hundreds of thousands, like when I'm talking about US dollars, when the dollar amount goes up, your consideration as a high net worth investor, right? You have to consider how you're going to be able to sell the precious metals back when it's time, right? Okay.
Yes.
So
Yes.
so like because you're asking me about high net worth people, right? So I'm really like diving into that. So for those people, like I'm going to use myself as an example. My consideration when I bought my physical gold was such that, like I said, when I sell it, the whoever is going to buy it has deep enough pockets, have liquidity to buy the physical gold from me. I don't want what I don't want to do is to, let's say, have like a couple hundred ounces or 1,000 ounces of gold or whatever, right? Just hypothetically.
Sure.
And I'm going around to like 10 different coin shops or 50 to sell all my gold.
Sure.
Because realistically, that's what it will take, right? If you have like a couple $1 million worth of gold or like 10 million. Again, it's just an example. So to those people, yes, you can buy the gold if you really want to. Like I don't know, like American Eagle, gold coin, maple, all sorts of different stuff, right? But what they are thinking is that they rather buy it from somebody like a bank or a smelter. Okay? A
Yep.
smelter, I'm talking about in Hong Kong, in China, is a little bit different than the US. Like, as an individual, I can actually deal directly with the primary smelter for the Hong Kong Gold Exchange.
Interesting.
Their name is called, and your friends, David, they all know these guys, right?
Yeah.
Like, they're called like Wing Feng. Wing Feng. They're like the biggest smelter of physical gold and silver in Hong Kong.
Yeah.
And they do it for the Hong Kong Gold Exchange. So guess where I bought my physical gold? Most of it. I bought it from a bank. Okay.
Yeah.
And the bars that I bought were, I still own them. They are, Hong Kong Gold Exchange good delivery bars.
Sure.
That were smelted by Wing Feng.
Yeah.
So think about that, right? If I own a whole bunch of that, I sell it.
Yep.
I don't have a problem. I can sell it to any bank in Hong Kong.
Sure.
They have the liquidity, right?
Right.
If I were to buy like maples or whatever, then I might have difficulty selling it to one individual place. I have to go to 10 different places.
Yeah.
Like that's just a real problem that I faced. So what I'm trying to get at is in the past, like when I bought my gold, let's say 2009, 2008, 2010, 2018, even 2019. Back then, it was difficult to buy good delivery bars directly from the bank. They just simply they don't have the inventory. I'm not kidding you. You go there and like for example, myself, I cleaned out whatever they had multiple times to get my stash. Okay, so that's a choke point right there, right, David?
Sure.
Do you see that? You see what I'm saying? So I'm not disagreeing with the experts. Like, if you really want it, you can buy gold. But if you want the best form of gold with the highest liquidity, it was difficult in the past.
Yeah.
Okay? So for the high net worth...
I'm going to jump in there real quick. And that's why a lot of the whales have their silver on the COMEX right now. It's in an eligible category, so it cannot be touched. It's there as a warehouse or as a vault, and they're not going to have a problem offloading $1 million, $2 million, $10 million, $200 million, whatever, in that exchange. And as you said, even some of these well-known retail dealers do not have the backup credit line if everybody's sold at the top. They just don't. And so I think you make a very good point. If you don't mind, Eric, I think you covered that quite well. I'm ready to move on with the next question. I got quite a few to go through. Are you okay with that?
Oh, I just want to say one last thing. The difference between now and before. I told you the difficulties of before, right? They just simply don't have the inventory to sell me, right? Now what's happening is for example, in Hong Kong, Wing Fang, they are directly selling good delivery bars to the public.
Okay.
So basically, they say, you come to us, you have the money, we'll sell to you. So the choke point is no longer there. Magically lifted, disappeared. Okay?
Yep.
And
Excellent.
in China, the commercial banks are directly selling gold bars to the public since the beginning of this year. I think I just told Andy Shackman this when I was on his program early this year. That was like this is a new thing in China. So again, the same choke point that apply to China, just simply is not there anymore. So therefore now high net worth individuals can deal directly with the source and buy physical gold directly from the source.
Very good.
That's it. That's
Thank
the
you.
answer.
Okay.
Yes. You're welcome.
Family offices in Asia are aggressively allocating to physical gold. Are there regional differences in demand, say, between Hong Kong, Singapore, mainland China, and India? What's fueling those distinctions, if there are any?
So I can only speak for Hong Kong and China. I believe, Hong Kong, the difference I think is this, right? In Hong Kong, I think people are a little bit more comfortable with voting services. Okay. So if you have you own a whole bunch of gold, couple $1 million, they just feel more comfortable with a third party holding the physical gold, or they keep it in the safety deposit box at the bank. In my opinion, that's the same thing as voting. Okay.
Okay.
In China, the difference is that I see a high withdrawal rate. So people don't necessarily trust the third party. They really, I'm talking about the smart guys, right? They really want the physical gold in their own hands. Okay. So it's what's the saying? If you don't hold it, you don't own it, right? That's what people keep telling me. So that's I think the predominant mentality in China for the high net worth guys. They really want to get a hold of the physical gold. They want to verify, authenticate it, and have it in their own hands.
Very good. I want to circle back a little bit. You did a lot of the smelters, but how are the developments like direct smelter selling affecting the traditional coin shops, retail bullion dealers, banks, et cetera? Has it cut into their business? Do people even know they can go direct to the smelter? What effect has it had so far, and where do you see it going if you think it's going to change things?
Okay, so that's a very good question. I don't see the coin shops we're talking about essentially just a few big ones like Kitco Hong Kong. You're probably really familiar with those guys, right?
I am. I know them.
LPM,
Yep.
exactly. LPM Group, okay, and maybe Li Cheng, but they also a smelter as well, and Wing Feng, who I introduced earlier in this program. So the smelters like Li Feng and Li Chong, okay? I don't think and Li Chong is really dated. What I mean is if you walk into Li Chong's office or retail storefront, it looks like he traveled back in time to 1975. Okay? I think that's the last time they renovated their place. It's 1975. And the average age of employees over there is probably above the age of 70. Like a bunch of old guys.
Gotcha.
So what I'm saying is that the smelters, directly selling to the public, I don't see that is cutting into the business of the coin shops, because I talk to the Kitco guys once in a while, and their business is booming.
Okay.
So
Yeah.
they are running out of stuff to sell half the time.
Yeah.
So I don't think the smelters are cutting into the business, and then the banks, like I told you before, right? If you
Yeah.
want to buy, let's say, more than, I don't know, 50 ounces, right? That's like 5 TL per good delivery bar in Hong Kong. Okay, that's 6 troy ounces.
Yeah.
So we're talking about like let's just simple 8-10 bars, right?
Okay.
8-10 bars, you pretty much probably like you probably cleaned out half the inventory right there. Or in
Wow.
some cases, they probably don't even have that inventory. I'm talking about the banks here. Okay.
Yes.
So I don't think, like I said, like again, I don't think the banks and the smelters cutting into the business of the con shops. Now, also, David, they sell different products.
Yes.
What I mean is, like, the banks and the smelters, they sell the good delivery bars, okay, predominantly, and the con shop sells stuff that is really beautiful, like Canadian maple, right? Like
Yeah.
American Eagle. So it's a different product. The people who want the maples and the eagles and the libertas, they might not want the good delivery bars. So I think it's a very good kind of complementary businesses that they have going there that covers the entire spectrum of customer base.
Very good. So, what about silver versus gold? When I was in China in Beijing, I went. I didn't have a lot of extra time, but the time I had, I went to seek out buying silver or gold. Gold wasn't easy, but could find it. Couldn't find silver anywhere. The only silver I could find was like silver chopsticks. Now, this is back in the early 2000s, so I know things have changed. But just for Hong Kong and China, what's the appetite for silver versus gold? And is it as easily accessible as gold, or is it demanded like gold?
Well, silver in Hong Kong um, are mostly sold in the form of silver jewelry. It's the same in China. So jewelry is the number one, avenue for consumers to buy silver, and that's big in China. Just because silver is a precious metal, but it's what 1/80th, 1/90th the cost of gold, right?
Right.
So I mean, it's just basic economics. It's so cheap. It's a precious metal. People love it. People buy silver jewelry. So that's the number one avenue for consumers to buy that kind of stuff. But as I understand from my friend Bai, who is a Oriental Ghost Tonics, he's an expert on precious metals in China. He has shown us that Chinese citizens also have an appetite for physical gold bullion, like big bars of silver. Okay,
Yep.
and I see that picking up. I mean,
Right.
if you go on Red Notes in China, there's a lot of talk about silver, and they talk about the gold silver ratio, just like the rest of us.
Okay.
And I think more and more people in China are catching on to the fact that silver is really the unloved son of the precious metals family, right? That
Right.
needs more love.
I
So
couldn't agree
yeah,
more.
exactly. So I see that happening, and then in Hong Kong also, I know for a fact that there's a community of silver stackers who just love to buy silver, like myself.
Yes.
Every chance I get, I buy more silver. That's
All
what I
right.
do now.
So
Yeah.
here's a trick question for you. Do you know what that is?
In terms of what, like quantity or like,
No, well, what the name of it is. It's a hunk of silver.
oh, you,
I'm
you
told it's
showing
a
me it.
I don't know if you can see it's called a Wan Bao is what I've been told.
Let me take a look again, David. Oh, that's a wan bo. You're right.
Yeah,
Yeah, in Cantonese it's called yun bo. In Mandarin it's wan bo. Basically, it's their silver ingot, right? That they
right.
stack.
Yeah.
Yeah, and it's shaped in that manner so that they don't topple. Okay, so you have that. Do you see that like curvature, right?
Right.
Okay. So I think the one that you have in your hand is just a modern artist's representation, okay, of
Okay.
what they had. But the ancient ones that they dug up, there's no bulge in the middle. It's actually sunken in. The,
Oh,
but
okay.
but the but the but that's like shaped like a ship, so that they can just stack it one on top of the other, and it doesn't fall topple over. Yeah.
Interesting. All right, so I want to look at how do you see the COMEX and LBMA delivery mechanism? This exchange for physicals getting very interesting. Is this LBMA COMEX delivery intersecting with Asia's increasing physical demand?
So I think what's happening, I've talked about this a lot to other hosts as well, like in their programs, is that the COMEX has really, really sucked in a lot of physical gold and silver from the LBMA and elsewhere in the last 8 months. If you look at, I sent you some charts, David. I don't know if you can pull it up on X, on your X account. I sent you some charts that shows the registered and eligible vows for gold and silver at the COMEX. We essentially sitting at like a really high level. It's as high as the spike of 2020. So I think the cover ratio is almost 1 to 1 for both gold and silver. Okay, that means like whatever open interest that is out there is backed 1 to 1 with physical gold and silver. So a lot of people say, COMEX is still in default and all that. No, right? If you back
Right.
1 to 1 cover ratio, it's not going to default.
Yeah.
What are you talking about, right? It's
Yeah.
not happening.
That's better than the banking system by far.
Yeah, exactly. So the problem is at the LBMA, see?
Yeah.
Because like what the experts have been saying, and I don't necessarily agree with the entire narrative, but the mechanism that they described and taught us is correct, right? What they're saying is that when, let's say, 9:30 in the morning, Eastern Standard Time or Eastern Daytime, right, when New York opens, you have all of a sudden you have like somebody slams gold and silver, dumps like half a year's worth of like mining supply in paper gold into the market. So people like Ted Butler, rest in peace, right, said
Right.
that that's like manipulation, that's naked shorting, right? Okay, if you look at it, as like just the COMEX shorts in isolation. Okay, that you can say that it's naked shorting, but what the experts have been telling us is that when the banks short at the COMEX in that manner, they are at the same time buying a long position at the LBMA
Right.
to hedge that, right? So
Right.
so you see, like they call it like the EFP basis trade, right?
Yeah.
So normally, when everything is all good and dandy, when the COMEX prices are lower than the LBMA price for gold and silver, they make an arbitrage, right? They make a profit from that basis trade, and then they just close those EFPs out by cash. Like I mean, you talk to any of these experts, they'll tell you most of those EFPs, okay,
Yeah.
exchange for physical. Don't let the name fool you, because most of them normally are closed out with cash settlements,
Yeah. I
pure
can't
cash, no
emphasize that
physical.
enough. I mean, I've known for
Okay.
years, sorry to interrupt, but it just drives me
Yes.
nuts because there's so many newcomers that think they've got the market figured out how it really works. And just to back up a little more, I've had that discussion with Ted about offsetting the trade at the different exchange, and I won't go further. I just brought it to his attention, and let's just say he wasn't having it. I'll put it that way.
Yeah. So anyway, like I'm aware of the concentrated short positions that Ted. Again, Ted is wonderful. He's awesome, and he said it over and over again. I agree with him. But yes, those short positions, in quotation marks, hedged at the LBMA. So where's the problem now? It's at the LBMA. You see, right?
Yeah. Yeah.
Those physical contracts, are they really physical? Are they like, is the metal really there?
Right.
That's the problem.
Sure.
Like a lot of people, they look at the LBMA vote numbers, okay, and they say, well, like how much of that gold and silver are unencumbered, free floating metals? Because if they understand, right, LBMA vows are the same vows for SLV, GLD. They double count that stuff.
Right. I know.
Literally. Right?
I
So,
know.
what's the actual free float?
Yeah.
Like I'm not going to get into that here because like some of your audience, we're going to argue until the cows come home, right? Because
Right.
that's not official numbers, right? But the fact is, earlier this year, when we have that acceleration with the COMEX sucking physical metal from the LBMA, what happened? The physical gold delivery at the LBMA got delayed to like T plus 30 plus, right? Like
Right.
meaning that when they're supposed to deliver, they said, no, no, guys, we need another 30 days. So what does that tell you? Do they really have the gold? Or are they doing just-in-time inventory, right?
Yeah.
Nobody knows. So what I'm saying is that Ted Butler is not completely wrong. In fact, he's correct for the most of it. It's just that the problem is actually at the LBMA, not the COMEX, because the LBMA, the COMEX, and the ETFs, right?
Yeah.
They work as one system.
They're a team.
There is a team, right? So you
Yep.
cannot just say that the COMEX have all these concentrated shorts, therefore it's going to blow up. Doesn't work like that. That's only part of the picture, right? The entire
Right.
picture, you have to consider what's happening at the COMEX, what's happening at the LBMA, and what's happening with the ETFs.
All right. Well, that's excellent. I think you're one of the first to really sort that out, for the public. And I thank you for that. So let's dig a bit deeper on that. So with the direct physical sales going to family offices and stacking in Asia, talking Asia now, what's happening to the premium spread and any availability issues?
So in Asia, we really, for the most part, we have pretty low premiums for physical gold. In terms of like the Chinese, like the Shanghai Gold Exchange premium versus like the Western gold price, right? Um, what I've noticed is that because, like as you know, the EFP spread is really in some days it's like crazy, right? It goes
Yes.
like it can go up to $100
Yeah.
in like one of these bad days for the banksters, right? For the bankers. But like when I look at the Shanghai Gold Exchange, I like to compare their price to the LBMA price. Because essentially, what's happening? Everybody is trying to grab the cheapest gold or silver. So if you supposedly have the cheapest gold and silver at the LBMA, everybody want a piece of that.
Right.
Does that make sense? Right.
Sure.
And what I've noticed is that when they slam the gold and silver prices, then usually that's when the Shanghai price is a lot higher than the gold and silver price at the LBMA. So what I'm saying is that I don't even think, in my opinion, the LBMA price is even the real price for gold and silver, other than a price control mechanism to suppress pricing.
I'll go along with that.
You see what I'm saying, right?
I do.
So like that's essentially what I'm seeing. That's it.
Okay. I got one that's maybe a little bit of a stretch, but maybe you can help me. And I haven't had time to really dig deeper, but we've heard from reliable sources that China is basically going in primarily to South America, and they're buying doré directly from some of the miners, particularly Peru. Do you have any maybe not physical evidence that you witnessed it happen, but good sources of yours that could verify any of that? And if so, do you have a feel for how much?
So like I'm going to refer back to one of my friends on X. By his handle is Oriental Ghost on X.
I've dealt with him. He's been very helpful to me. Yes. Go ahead.
Yeah.
Sorry.
So he basically tracked this, and yes, it's happening. because it's like the news is from Chinese state media.
Okay.
So official sources. These are not like some guy off the street saying, "Hey, David, look at this." No, it's official Chinese media saying that the Chinese industrials are directly going to places like Peru to get dory bars, right? Unrefined silver bars directly from Peru. And that came, I think, on the back of President Xi visiting Peru. That was like 2 years ago, I believe, around 2023. So in terms of like quantity, David, they keep that really secretive because, like, I tell you what, David, China doesn't, they don't mind the price of physical gold go up. Everybody wants the price of physical gold to go up. Everybody wins. Okay, look at how much debt everybody has. All right. So gold, I don't think anybody cares. It can be like $10,000, 20, like maybe the bankers who shorted it care, right? But other than that, most countries in the world, most central banks, if the price of gold goes up, fine. But the price of silver is a little bit different. Silver is a strategic metal that is used by all industries across the board, like solar, like computers, AI. I mean, the military use a whole bunch of silver for missiles, airplanes, everything. I mean, you can name it, they're using silver. Okay, and then China, what's happening in China? China is really cranking up the electric vehicles, right? The EV initiative. Why are they doing that? Because they want to decrease their dependency on fossil fuels. I mean, China has really good relationship with Russia, so they got pipelines with Russia. But what if the U.S. Cut off Chinese oil, at the Gulf? What's going to happen? Like, Chinese industries will stall, right? Just like what happened to the Japanese Empire right before World War II. America just cut off their oil supply. So China is playing like preemptively, okay? Just in case these things happen. And China is really invested in electric vehicles, the electrification of their economy. And what do you need for electrification? You need silver.
You sure do.
You need copper, right? So they're just buying silver like crazy, but yet they don't necessarily want the silver price to go to the moon. That's the reason.
Yeah, now it makes perfect sense. But I get the argument about the demand on silver, and silver itself is an element highly required for a high-tech society, but that never asked the question, who's buying me? Is it an investor buying me or is industry buying me? It's demand. Now we know all markets move at the edge of the demand, the marginal buyer, and that is the investor, because the industrial need requirement just basically is a steady state that increases almost every year over year. Having said that, Russia bought some silver recently. I would say for strategic purposes. Some say for monetary purposes. I just made the argument. I don't really care. They bought it. Do you think that may be a lead into other nation states actually buying silver as a strategic resource? You just, from my opinion, indicated that the Chinese are looking at it for their needs and doing it rather stealthily, which I basically commend them for. And as you outlined, or at least how I heard it, there's a reason for that. The industry doesn't want to see the silver price very high. Gold, you made the great point. Everybody wins. Silver, not everybody wins. So anyway, back to my question. What do you think about Russia making a strategic move into silver? And do you think that may spill over into other countries?
I think, the world may switch from suppression of silver price mode, okay, to a mode where they have to just grab as much strategic silver as possible at any price below $100. I think that mentality is slowly coming about right now. Okay, what I
Yeah.
mean by that is, now in my humble opinion, any silver below $100 is cheap. It's dirt cheap. I mean, silver is the only asset class that is still below, significantly, by the way, okay, below is 1980 high. Isn't that ridiculous?
Yeah.
Right? I mean, so I think countries around the world right now, they might not be telling us, David, but I'm sure that, you know, any country that has any industrial production, if they are smart, is probably hoarding some sort of silver at their warehouses. Like India, China, the US, look at COMEX, right? I know you said, maybe family offices are doing it, but I'm sure industrials are doing it as well in the
Mhm.
US. And all the Asian countries like Japan, Korea. I'm sure everybody is buying silver and holding on to the silver. I mean, I don't know if you talk to Keith Neumeier a
Yeah, I
lot
do. Not a
from First
lot,
Minute.
but I
I
know
mean,
him.
yeah. Well, I listened to a couple of his podcasts, and he's right. Silver, it's not that easy to mine for silver.
No, it's not, there are silver mines and gold mines by far.
Exactly, right. So in most cases it's a byproduct, right? Of, if I understand it correctly, it's like a copper mining byproduct. But pure silver mines, unless you're Silvercrest, they don't even exist anymore as a company. They got acquired by CDE. But anyway, the bottom line is it's not easy to mine for silver, and I think, in my opinion, the race is already on. That's why silver is pushing $40 per troy ounce.
Very good. This kind of is a repeat of what you just told me, but I wrote it down in my notes. So, looking at the risk factor and the contrarian perspective, which we both have, do you see an over concentration in the markets right now in Hong Kong and China? And could sentiment shift quickly? In other words, maybe silver hits that $50 mark, maybe it backs off for a few days and then rockets to 65 or some crazy thing. Do you think that the market in Asia might say, holy moly, I know the algorithms will pick it up, but anyway, I want your thoughts on the Asian market because, I grew up near in the Bay Area, San Francisco, had a lot of Asian friends. And from my perspective, they really were pretty savvy when it came to business. Anyway, over to you.
So just so that everybody's clear, I mean, Asian people, Chinese, I can speak for the market in Hong Kong and China because I've a lot of run-ins with these people. I talk to a lot of people. Anyway, the bottom line is, um, believe it or not, even with the crazy videos that you see people like lining up for physical gold, buying jewelry, whatever, right? They're like the total allocation, okay, of their overall net worth into physical gold is less than 5%.
Okay.
Can you believe that? It's less than 5%. And just speaking from a like personal experience, right? These old uncles, big mamas, they call them, right? Like older ladies,
Yeah.
when they buy gold, they like, let's say they buy like 5 ounces of physical gold.
Okay.
Takes them a month, couple months to decide. you know, like if like physical gold to go down to the market to actually buy it. But a
Mhm.
lot of the times when these high net worth individual, when they call the broker to buy some, I don't know, Nvidia, takes them 5 minutes to
Yeah.
push the button. I mean, like, situation is not as bad as the US, right? Where most people, if you like tell them you're buying gold, physical gold or physical silver, they just laugh in your face. Okay, they think we are retarded,
Yeah.
literally, when we tell
Yeah.
them that in the US.
Sure.
But in China, it's not that bad. But still, what I'm saying is that paper, like investments in paper products, um, significantly outpaces physical gold and silver. So my point is that there's still a lot of headroom to go with physical gold and silver purchases in China and in Hong Kong. We're not there yet. So if you talk about like a turnaround, I don't even think it's going to happen. Like most people buy like a gold necklace, a piece of gold bar, they just lock it up, they forget about it.
Yeah.
Like if they forget about it, why would they, pick it back up and sell it all of a sudden? Just because of like I don't know, like a 20% price movement. They
Sure.
won't.
Okay. Yeah.
Yeah.
Well, that's kind of what I surmised, but you would know better than me. So, well, I've gone through and I took a bit of time going through, your videos, and I don't catch everything that you do, but pretty close. And I read your X every day. I really appreciate what you do for the community and your straightforward, level-headed, gut level truth perspective. None of us know it all, but certainly we can help each other. And so I just want to turn it over to you. It's all come from me, what I've thought through and thought were most specific questions I could come up with. So I just want to give you a free rein, Eric. What would you like to say about maybe the macro picture, gold and silver, things we haven't covered, and go ahead and take us out. But I'll give you an open forum here. And again, I appreciate your time and meeting with me. And we will have another one, I'm sure. But I try to be very judicious with everybody's time. So it may be a few months as the market develops, but if something really crazy goes on in Asia, I'll be first in line to try to connect with you.
Okay, well, thanks, David, for having me on your show. I just want to say that, everybody knows that Trump and Putin are meeting in Alaska right now, negotiating a potential peace deal in Ukraine. So my point of view of all this is that I think no matter what happens, Donald Trump is going to claim victory. Okay, so no matter what happens, I don't even care what happens. He's going to come out and say, we won. We won so much that we're tired of winning." He's going to say something of that effect. So when he says stuff like that, potentially that might, the bankers may take that as a cue to smash the price of gold and silver. I mean, that's not too far-fetched. It happens all the time.
Sure.
All the time it happens, right? So I'm going to tell viewers just to hold on, because nothing has changed fundamentally. It's not like the US is cutting military spending. Okay, right. $37 trillion in national debt right now and climbing. I haven't checked lately, but maybe you guys up to like almost 38 trillion, right? It's pretty crazy, the numbers.
Yeah.
And US Treasury market dysfunction, that hasn't gone away, especially for the long end. Okay, like the long duration 10, 20, 30-year US Treasury bonds. So just hang on to your physical, and eventually truth will prevail. That's the way I see it. And then with the miners, I know your viewers, a lot of your viewers are probably frustrated that a lot of the miners are still sleeping. A lot of the people in this community invest in junior miners. A lot of the junior miners look like they're comatose, right? They're not moving at all. And what I'm going to say to these people is that, it takes time, because for the senior and mid-tier producers, for example, they don't, they look at a average price of gold and silver over a period of time, right? So that, if they do make money, if there's a profit, it shows up on their balance sheet. Okay, it shows up on their quarterly reports. Now, we have what, a 6-month fine, consolidation almost. But before that, we had almost a straight climb of gold and silver prices. I mean, silver only consolidated for maybe 2 months, but you get my point, right? Like they're all going flat right now. But the good thing is that they're not crashing. So the 180-day moving average is going up every day, right? As long as the gold and silver prices don't crash. Therefore, I think right now the senior and mid tiers are doing really well. And eventually, once gold and silver prices go high enough, the juniors are going to do well, because the senior and the mid tiers, they're going to start, really, from what I heard, from a lot of experts out there, like people like Jordan from the Daily Gold, right?
Right.
Telling me that a lot of the seniors and mid tiers they haven't really got strong exploration programs within their own companies for the last 10 years because of cost issues. They don't want to jack up their cost. So their only alternatives going forward is to acquire the junior explorers or the optionality plays, whatever it is out there. So I think the time for junior miners will come. We just got to be patient. That's it.
Okay. Well, again, I thank you for your time. I will get this wrapped up, probably have it out in a day or two. I'll definitely send it to you so you can put it on your X. And again, it's great to have this conversation with you. Thank you.
Thank you, David.